Hey guys, it's Carter. Welcome back to the Swing Trade Blueprint. Hope you guys are all having a fantastic day today. Now, in today's podcast, we are going to be talking about how to go from being an unprofitable trader to a profitable trader. So I hope you guys all enjoy this. If you guys do, hit that like button and subscribe and follow wherever you guys are listening to this. Guys, we talk about everything swing trading and trading, so hit that like button, subscribe, and if you guys want to learn more about swing trading, I highly recommend checking out our school. It's awesome. It's an 8-week course where I teach people the proper way to trade. It's not a get rich quick, it's not alerts, it's not anything like that. I teach people the proper techniques, the proper strategies to become a successful trader. And you guys can use code LEARN to get 50% off. Only 2 spots left for that code. So check it out down below. And guys, let's get started here. So the first thing that you guys are going to need if you're going to make that transition from being an unprofitable trader to a profitable trader, that statement, being unprofitable to profitable, means that you're already taking trades and you're losing money. So the first thing I would recommend doing is to start reviewing your trades. Reviewing your trades will separate you from pretty much traders that make money and don't make money. And the reason why that is because you can review your trades. You can see what's working, what's not working, why are you taking the trade. You can track your performance. But more importantly, reviewing your previous trades can identify patterns on what went wrong and what went right, so you can implement them in future trades. Now, having a trading journal, guys, like this is the one that we use. For those of you that don't know, Mastering the Swing, a trader's journal. The reason why we love it, boom, you can track your performance. It's awesome. I'll put it down below for you guys. Now, you don't need a special journal though. I don't want to hear that excuse. You can use a 99-cent journal from the dollar store. Start reviewing your trades. You need to do that. You need to have in detail a trade log. And doing that will help identify, your entries, your exits, and it'll start helping you understand your risk management. It literally will help you take a step back from your bad trades and start making better trades for the future. Now, if you do that and you're still losing money, then I would start to identify a clear strategy. Focus on a specific strategy or trading style. Some of you maybe are day traders, but would be better suited as swing traders. And the reason why I say that is because day trading requires a lot more time. It's a lot more risky. And you just have to be more actively in tune with the market. Trading, you got to have a trading strategy that meets your personality. Refine that strategy until you master it. And doing that, one of the things here that you guys can do nowadays is you guys can back test your strategy using historical data, using sites like Moomoo, which is the broker I use. Now, back testing is very important because you can see what has worked in the past, because the thing about the stock market is history tends to repeat itself. So you can review your strategy from the past and you can implement it for the future. Now, if you are doing that and you are still losing money, then you need to improve your risk management. Anytime you take a trade, you need to have your risk tolerance per trade. So you need to limit the amount of capital you risk per trade to no more than 1% to 2% of your total account. This prevents one bad trade from impacting your account. Use stop losses. Always set a stop loss. So this is the max amount of money you're willing to lose on this one given trade. And then obviously position sizing. Ensure that you are using the right position size based for your trades in your account size, your risk tolerance. When you over leverage is a very, very common reason traders become unprofitable, is because they're trying to over leverage. They might be using margin, which is, you pretty much taking a loan out to trade, which is terrible. So just focus on your strategy. Focus on setting up good trades with a good risk and reward, meaning you're risking $1 to make a minimum of $2. And just start small and build up. If you are doing that and you are still losing money, then you need to start controlling your emotions. Emotions, in my opinion, make up about 80% of trading. A lot of people think that this master plan, this strategy, this edge is what makes up a trader. I personally believe it's emotions. We saw this huge thing with AMC and GameStop a couple years ago where everybody was buying this stock. And guess what? Everybody lost a lot of money with that stock because there's so much FOMO. There's so much fear of missing out that people would take risky positions on it. And then the stock obviously turned south and people lost a lot of money. So focus on your strategy. An easy way that you can really limit, you can narrow down on your emotions is to have a checklist. Make sure you have a checklist. I put it right in my trading journal, the one that I sell. And the reason why is because I had a hard time with emotion. So I now have a checklist before I ever place a trade. I go, okay, what's this setup? Is it on an upward trend? What's the support? RSI? When's the earnings report? So I have a list of criteria before I ever place a trade. Doing that will help not mess with your emotions. So the next thing here that I want to talk about is just basic technical analysis. You need to learn how to draw charts. You need to understand how to draw supports, how to draw resistance, how to use indicators like moving average lines, RSI lines, MACD indicators. That will really help you with your entries and your exits so you can understand why you're buying, why you're selling, so you can be a better trader and be more profitable. So master technical analysis. You really don't need to master fundamental. I know there are some traders that really like fundamental analysis, but personally, I think fundamental analysis is more long-term investing because you're starting to care about the revenues, the cash flow, the income statement, all of that stuff. And often you're holding through several earnings. So personally, as a swing trader, for me, I hold my position 6 to 9 days on average. So the next thing here that you guys need to do is just continue to adapt, continue to learn. Consider yourself a student no matter how long you've been a trader. I've been a trader for 6 years, and I think of myself as a student of the market. And the second you think you know everything about trading or everything about investing, that is the time that you are going to lose money. So, you have to understand that, one, you need to constantly review, constantly adapt. The stock market changes. Your strategy will change and alter over the course of your trading career. And the last thing that you should be doing if you go through all this and you're still having a hard time, seek out more education and mentorship. We do have an amazing community of members where I teach people literally how to trade. It's not a get rich quick. It's an 8-week course. And the thing about it is the traders in the community know, this is a course where people go to because they've traded in the past and they've lost money. We've done excellent jobs with day traders doing that conversion, from day trading to swing trading. We offer coaching, mentorship. It's awesome. So check it out. You guys can use code LEARN to get 50% off. So check that out. And guys, don't try to make $1 million. Focus on base hits. Focus on small returns that will compound. Don't expect to make $1 million your first year, guys. So, I hope you guys all enjoyed this podcast. If you guys did, hit that like button, subscribe, follow, and we'll see you guys in the next one. Take care.